The dollar paring back some of its losses here today. You're looking at gains of the dollar index up just about 0.4% after initially plunging yesterday following the Fed's larger than expected rate cut. Our next guest thinking that we may see some more weakness potentially here within the currency. So let's talk about that. We have Francesco Pesole, FX strategist with ING. Francesco, it's great to have you here. So talk to us about that upcoming weakness that it looks like you are expecting. What does that downside then potentially look like?
Well, I think the initial reaction, to the big Fed cut was not very clear for markets. They tried to make sense of the fact that the Fed did cut by 50 basis points, but then Powell in the press conference was quite hawkish. Now, we think that moving on is more likely that the Fed will move in 25 basis point steps. However, within the markets, will still prefer to err on the side of dovishness when it comes to pricing. And ultimately, they may prefer to stay on the soft side, on the bearish side of the dollar into the U.S. election, also because it appears that market pricing is moving closer and closer to favoring a win by Harris, who is a more dollar negative candidate.
And so with that in mind, as we're thinking about what this Fed move means, what does this signal to you for other central banks around the world?
Well, I think there has been a pretty substantial and clear decoupling between the Fed and other central banks. I think global developed market central banks, at least, seem to be moving much more in line. During the hiking cycle, the market rate expectations moved quite in line at the beginning of the easing cycle in some of them. But I think a lot of central bankers make clear that they are quite independent to the Fed. And I think that the decoupling is quite clear with the ECB and even more with the Bank of England. We saw today they're keeping rates at 5%, and they're not really signaling they're in any rush to cut rates. I'm not sure that we are in a position to derive much for other central banks based on what the Fed is doing.
That's so interesting because I have heard at least some of the commentary out there that this does pave the way, almost give the green light there to other central banks, but it doesn't sound like you necessarily agree with that or that it's going to be anything that substantially, I guess, plays into that decision.
Well, I mean, we must think of this way. The Fed didn't move first. They're not particularly leading the way. This 50 basis point cut seemed, the way it was kind of described by Powell, it was more like backward-looking cut. They should have cut at the previous meeting, and they just decided to deliver 50 basis points. But then they went into a press conference trying to tell markets that 50 basis points won't be the norm. In a way, it feels more like the Fed is catching up with other central banks. You look at the Bank of Canada that moved early, obviously the European Central Bank, but also the Bank of England. So I don't think there is this very strong notion that the Fed is leading the way in monetary easing.
Okay, and so we're just months away from the U.S. presidential election. Can you tell us what might happen with the strength of the dollar here as we're considering both candidates?
Yeah, so I believe it will be very important, the positioning picture of the dollar once we get to the election. We think there is a decent case for dollar short positions to rise into the election on the back of these Fed cuts. And ultimately, this means that if we assume there's an equal kind of probability of Harris or Trump winning, the risks are more to the downside for the dollar because there would be more more substantial negative, risks are more upside to the dollar because there would be an asymmetrically larger positive impact on the dollar if Trump wins compared to a win by Harris. We think it will be quite a binary event, but definitely if Trump wins, we'd probably be looking at higher volatility than under Harris.
Francesco Pesole, who is the ING FX strategist, thanks so much for taking the time here with us today.